GDP shows the U.S. economy just had its worst quarter since 2022.
The U.S. economy backtracked in the first quarter of the year as tariffs implemented by President Trump appeared to weigh on growth.
The U.S. economy shrank in the first 3 months of the year, fueling recession fears.
The 90% chance of a recession.
The U.S. GDP for the first quarter of 2025 has officially contracted following Trump's tariff war, causing concerns around an economic downturn. Global uncertainty has spiked to record levels. Fear around another global financial crisis has risen to 2010 levels, and the VIX is still quite elevated after reaching the highest level since 2020, indicating extreme market panic. Back then, this combination led to a 35% decline in the stock market and a 55% crash on Bitcoin. Now, Bitcoin has just triggered the exact same signal that it did only 5 months before the 2020 COVID recession crash. This signal, called the death cross, occurs when the shorter-term moving average crosses below the longer-term moving average, indicating that momentum has shifted to the downside. This signal occurred in October of 2019, and 5 months later, Bitcoin fell by 55%. In fact, in the past 12 years, 3 additional death crosses, so 2014, 2018, and 2022, all preceded major bear market declines. Following these 4 death crosses, Bitcoin saw an average drawdown of 52% in about 6 months. So these death cross signals proved to be successful ones, as they were a reliable warning sign for a sharp decline on Bitcoin. Another successful death cross signal today could put Bitcoin all the way down at $37,000 by October of 2025. So is that what's coming next for Bitcoin? Well, the 52% average drawdown is only for the death crosses that happened heading into bear markets. The death crosses that happened in the beginning or middle of bull markets actually proved to be failed signals. September 2015, March 2020, and June 2021 all saw a death cross, but each of these proved to be great buying opportunities as Bitcoin went significantly higher following these signals. In fact, even since this bull run began in November of 2022, Bitcoin has seen 2 death crosses, one in September 2023 and the other in August 2024. Both of them occurred near the bottom of the pullback before price reversed and moved higher. If we look at the average return following a death cross in a bull market, in other words, a failed death cross, Bitcoin saw a 98% move up in the following 6 months. Such a move today could hypothetically put Bitcoin around $150,000 by October of 2025. So if a successful death cross plays out today, Bitcoin could fall to $37,000 by October. And if we see a failed death cross, then price could rise to $150,000 within the same period. This naturally raises the question, how do we know whether this death cross is happening in the middle of a bull market or near a bear market? After all, in each of the 4 bear market death crosses, so 2014, 2018, 2019, and 2022, Bitcoin first saw a sharp rally before collapsing. Some say that we're seeing the same pattern today, arguing that the recent move up on Bitcoin is just a dead cat bounce before Bitcoin heads significantly lower. To evaluate, we can compare the Bitcoin top from January 2025 to all of the prior tops that preceded bear markets by simply adding the 200-day moving average and looking at how stretched Bitcoin's price was from the 200-day moving average when the peak occurred. The idea behind this is to see when Bitcoin's price has gotten overheated. When Bitcoin stretches far above, it's often a sign that the rally may be getting ahead of itself. It's like a rubber band that's stretched too tight and waiting to snap back. These stretches tend to lead to full-blown corrections on Bitcoin. This chart shows the price of Bitcoin divided by its 200-day moving average. In other words, it shows how far above or below Bitcoin is trading compared to its long-term average price. When the line is high, it means Bitcoin is stretched far above its typical trend. And that's often when the risk of a correction increases. Historically, when this ratio climbs above 2.4, it's been a red flag that Bitcoin's price may be overheating. That happened in March 2013, November 2013, November 2017, June 2019, and January 2021. In each case, if a death cross occurred after this signal, like it did in April 2014, March 2018, October 2019, and January 2022, it proved to be a successful one. The only exception was in January 2021, when Bitcoin flashed an overheated signal. Shortly after, Bitcoin saw a death cross form in June of 2021. But instead of declining, Bitcoin saw a 110% rally in the following 6 months. It wasn't until Bitcoin had its second death cross in January of 2022 that price actually saw a significant drawdown. All the other death crosses that occurred outside of these proved to be a failed death cross, as Bitcoin saw significant upside in the following 6 months. If we look at the rally that occurred prior to today's death cross, we can see that the ratio reached a high of only 1.54, so quite a bit lower than the 2.4 threshold level. In fact, following the recent correction, this ratio has now reached around the same levels as we saw in September of 2023 and August of 2024. Both of these instances were followed by a death cross that actually marked the bottom before a significant rally in the next 6 months. We think that Bitcoin is in a similar situation today, and we can also see evidence of that by looking at Bitcoin on top of the global M2 money supply, but with the money supply line shifted forward by 12 weeks. Global M2 basically tends to lead Bitcoin's price by 3 months. It accurately anticipated the rallies that we saw following the death cross in September 2023 and August 2024. Today, it's once again showing that Bitcoin has put in a bottom last month and is likely to continue rising in the next 3 months. This is a scenario we had also highlighted in a crypto video from early April when Bitcoin was around $80,000 and many were still calling for significantly lower prices. And for now, Bitcoin is indeed showing signs of a failed death cross as price has been rising following the most recent signal. In just the past month, Bitcoin has risen by over 30% and has reclaimed all 3 key moving averages, indicating that bullish momentum is back. These moving averages should now act as support if price does pull back here. The moving averages also coincide with the $91,000 support zone. As far as this region holds, we're expecting Bitcoin to gradually move higher towards new all-time highs. But if Bitcoin breaks below, then we wouldn't rule out some more short-term base building before the price is ready for new highs. By the way, our members have made some incredible profits during the recent crypto market rally. For example, we caught a 36% move on Arrow and a 62% rally on Sui. In just the month of March, P. Kane secured a 50% profit with a 90% win rate, and S-Lock had a 140% profit with an 88% success rate. If you want access to market updates, educational content, and real-time trade alerts from 3 professional traders, make sure to join our crypto trading membership using the link in the description below.